This conference will now be recorded.
Good evening, ladies and gentlemen. It's Real Estate Trading Frank. It's approximately 8:38 p.m. on August 1st, 2019. This is a very critical strategic midweek webinar. Session will be recorded, uploaded to the Google YouTube channel for viewing by all members and free trial subscribers and anyone else with the internet connection out there. It's a very valuable resource, as you all know, and these forecasts and predictions on the market and on individual stocks have come to fruition, I would say, good 70 to 80% of the time, if not more. I don't see anyone here yet. I know it's a beautiful summer evening all across our beautiful nation, so I don't blame anyone for not being here at this time at 8:39 p.m. I did broadcast that out. Whichever the case, highly suggest that you all listen to it at your own time, because I think it's going to serve your benefit, as it always has. And hopefully you do it before the market begins tomorrow. On that note, let us begin. Full disclosure, this is for financial education and not for any solicitation or advice. I'm going to try to keep this real short and simple, given that I don't see anyone in the chat in the webinar yet, but whichever the case, if people come in, they're free to ask any questions. First and foremost, I believe, and I'm not quite sure yet in my clueless eight mind, whether this is a CIT. Now, what is a CIT? A CIT is basically, in Wall Street lingo, is a change in trend. The primary bull trend that we have worked off so well for a very long time, in between substantial pullbacks, we might be in an intermediate CIT, which is change in trend. A change in trend implies that instead of having a overall swing long bias, we are going to move into a bearish short bias mode. Now, nobody ever knows when the market is going to go into a protracted downturn till after the fact that it happens. However, the tactical charts that I publish every single day, every single hour, every single 30 minutes, every day, do give us a pretty strong technical view of whether or not we are going to undergo a CIT. A change in trend is not something that you all should just walk away from or take it lightly. A change in trend means that the market will have quick reflex rallies, which will be met by heavy selling, as we saw today. Now, one day does not make a trend. Our technical charts that we're going to go through will tell us where we can basically expect to see a sharp reversal bounce, as I have done for years now since the service started in 2014. So saying all that, keep in mind that this is a market of stocks, and individual stocks will follow their own tune depending on specific news or whatever the case may be. There will be M&A, there will be buyouts, there will be all kinds of stuff that will happen. Activist investor getting in, private equity, PE, not price to equity, price to earnings, but PE, private equity getting into a stock, and the stock will pop. Not everything moves in an asset correlation with the overall S&P 500, Dow Jones Industrial Average, NASDAQ 100, or the Russell 2000. So there will be individual winners here and there on the long side, which we have to take full advantage of. And I will do my best to bring them to you, as I have done repeatedly. Another major important point here, which you all have to keep in mind. Market technicals are very fluid. I have said this for years and years. I'm saying it to you guys again. These are algorithmic, high-frequency driven, high-frequency black box-driven controlled markets. The biggest of the biggest guys who managed $20–30 billion say the same thing. Well after what I have told you guys. Algo HFT, algorithmic high-frequency trading. All these market movements are structured. We can identify points where the markets will attempt to bounce, and if it fails, you're going to go short again. And if it breaks out, you will go long. Now we're breaking down. This is where we expect to go on a technical basis. Will it get there exactly? I have no frigging clue, but I believe it will. This is a very short distance to move. From 29.44 to 29.13 is roughly about 30 handles. That translates into about 210 Dow points. Can we get 210 Dow points by first thing tomorrow morning? Yes, we can. Will that become a short zone? No, that will become a reflex bounce zone. Now, how did I draw that line? All I have to do is expand this, and you can see it. This was the last time the market bottomed in a significant way on the 26th of June. A day after my birthday. Now you know. I'm 81 years old, so I should know. So, remember, Plutus 8 plus 1, 81. So, saying all that, these 30 handles on the S&P 500 can be had very, very quickly. And as far as I drew the downtrend line here as well as I could, and it shows it's around 2900 to 2913. 2900 is a psychological support level. We all know that. 3000 was the psychological support level. You all remember that. I walked you guys through it, the whole breakout, the whole works. So now we are heading back towards 2900. Simple rule of the thumb. We normally get 100 handles or 100 S&P points. Hi, Trina. E-mini points, 100 S&P points generally on a substantial pullback. Now, you want to do it a different way. You want to talk about traditional corrections. We hit what I said we would hit, which was around 30.30. And if markets broke loose, we'd hit around 30.60. Well, we hit the first baseline, 30.30. So 30.30 up here, give or take a point, minus a 5% correction brings us down to 28.78. That's further below. 28.78, we have to look on the daily charts in order to figure that out. 28.78 comes down to somewhere around here, right there. Can we get there? Well, that's a 5% correction. Traditional market technical analysts and a lot of hedge fund guys, a lot of mutual fund guys follow the 5% rule. The 5% rule says that we get down to 28.78, right around here. That's a 5% move. Now, will that happen in a straight line? Never. If it happens in a straight line, I love it because we are long puts. We have hedges. We have VIX hedges. We have SPY hedges, SPY puts. And at this point, the ferocity of the move, and we will talk about the reasons why this happened, which you already know if you follow my Twitter feed very well. We were up big time today, 300 some points, as I called it yesterday from the bottom, and then things changed. And you know why it changed. The Trump comments and tweets, President Trump, on the China tariffs. Fund managers panicked, algos panicked, and they have a reason to panic. This is not good. Not good at all. Does that mean it's the end of the world? No. It's a tactical retracement. Futures are down roughly about 8. I wouldn't be surprised if I wake up tomorrow morning and futures are up 8. But that's the nature of the beast. So there is where we are. I could just shut down the webinar right now because I exactly told you what's going to happen. So from a technical standpoint, keep in mind, it's a different world. Not only are the machines running the market, it's the tweets that run the market. Whether it's a comment from the Chinese government or some very powerful tweets from the most important, powerful person in the world, which is the President of the United States, President Donald J. Trump. Came out of a meeting with Mnuchin and Lighthizer and stuff and said, you know what? We're going to slap 10% tariffs on $300 billion worth of goods, and we can possibly raise it. End of story. Market started selling right away. Huge quantitative asset management firms, which are basically momentum following funds, the machine started selling. That's the reason why you have something like this. Something like this doesn't happen because mom and pop is saying, oh, I'm going to sell everything that I have. They already sold everything they have, which comes to stocks. When these type of things happen, mom and pop say, I will never, ever, not even buy stocks. I wouldn't even, not even frigging look at a stock, which gives us a monumental opportunity to buy stocks at a massive bargain, hopefully sooner than later. Now, why do I call it a CIT, change in trend? We're going to take a look at it on the longer term charts. And you don't know whether a change in trend CIT is happening at the time it's happening. You can only predict, do some fast short-term short trades. But if the 50-34 moving average lines cross and all that stuff that I explained a zillion times, then you want to remain net short instead of net long that we have been. Individual stocks, I remind, will do different things. There will be a bunch of my biotechs that I keep on talking about that are going to get bought out. 3 of them have been over the past 2 years. And you'll make a gazillion dollars. But aside from that, I'm talking the general trend movement in the market. So this move, unprecedented. This, from a technical standpoint, is what, Trina? What does this pattern looks like? You know it. I have taught you. This is the opposite of this pattern. Teach people so when they listen to it. What is it?
Bear flag?
This is a major bear flag. Bull flags always look like this, right? We have talked about it for weeks and weeks and months. We have profited from it, and thank you for attending. Because when people hear it from a member, from a trader who's our service, they say, okay, they get it, so I should get it. So you're encouraging people to understand. Yes, so this is exactly the opposite, as you can see. Now, can it turn around and go nuts? Absolutely. Just the way a bull flag going higher can. Hey, Mike, how are you? Just follow up, listen to the first part on the recording. So just like a bull flag can go up and then all of a sudden fall. A bear flag can also keep on moving down. These are not normal technical things, okay? The only reason I can detect it and stuff because I adapt to the new normal. The old-fashioned technical analysts are like, what? What is this? Like, I don't get it. Like, you know, this is a bear flag. This is what a bull flag looks like. We're no longer in bull flag mode, ladies and gentlemen. Adapt or die. That's what technical professional traders like us on a technical basis adapt. We had VIX calls from last week that went berserk from 90 cents to almost $5. I sold a bunch of them yesterday, had a little bit there today. I sold those, and I bought the 19 calls that I told you guys to buy. And those are going to go berserk tomorrow. Because I've shown you the VIX charts repeatedly, over and over again. Remember, trade with your eyes wide open. With a focus on my real-time Twitter feed for those precision charts, which are structured so you can see where things can go up or down. Otherwise, you're going to be blind and you're going to get hit by a 18-wheeler, 16-wheeler, whatever the case may be, and you're done. Okay? So the biggest risk to the markets right now is this China-US war. President Trump, the most powerful person in the world right now, one tweet, and this is what happened. Trillions of dollars went up in hot air. Is this hot air? I don't know. I can't even draw hot air. Is this hot air? Seriously, guys, wake up. You have to adapt. Doesn't mean you have to go dogmatically bearish. You have to go tactically bearish. And this is exactly the stage I'm in right now. Why? Because my charts are showing we're breaking down. Now, does the breakdown, can it turn around? Absolutely, if it reaches the levels we're looking at. Futures are basically, somebody say, futures are only down 9. What the heck are you talking about? Well, fine, futures are down 9. That's exciting. So our VIX calls are going to open up very nicely. Our SPY puts are going to open up very nicely. But I'm talking about the technical patterns, just the way the opposite of what I used to talk about, the bullish patterns, when most of you sat around and never bought this type of significant low in the market, and we had a 300 plus point move today, which delivered very powerful profits. Did you buy some stuff yesterday, Trina? You don't have to lie, like say yes or no.
Yep, I did.
Okay, good. Remember, a small amount. It doesn't have to be big.
Yep.
But at least stay engaged. You know what I'm saying? So that's the way it is. Yesterday was dramatic, right? This huge drop yesterday. People wonder, like, why did that happen? Well, like I said, those quant funds, which are momentum chasing funds, they let go. Stops got triggered. And the most important thing was bond deals collapsed. Bond prices shot up. And somewhere in there was some hedge funds who were long, who were short bonds, and and they got hammered. The dollar shot up, so there was a lot of cross asset issues that created this drop. And then we had what we call in New York, I won't even use the word mofo, I'll just use it, tail, which told me, look at this long length of the tail. And I've explained this to you guys many times, especially to all my ACS advanced coaching students. You have a long tail hammer like that, you have a very high probability of moving higher. That is exactly what happened today till the tweet, which was sudden. I had stepped out on my balcony because one of my dogs loves to go out on the balcony once in a while. Beautiful view of the water, the whole works. And I came back, I saw one big red candle on one of my screens on the Quad Algo HFT platform. So what the hell's going on? No news at that point. I started reducing long exposure. I told you all to reduce long exposure. You did see that tweet, right? Did any of you see the tweet?
Yeah, I saw it.
Okay. So when I say reduce long exposure, I don't use those words too often, right? So just keep in mind for all my precious members and traders, when I say reduce long exposure, which I've been talking about for a couple of days, if you remember, I say reduce long exposure going into the Fed meeting, if you all remember from the last webinar. But when I say reduce long exposure, that means in simple English, it's a very proper way of saying, right? So let's talk simple, like, slamming down a six-pack English. Get the F out of town with your stocks. Not really. Just reduce your positions. Or get the heck out of things you're even up slightly on. What more should I say? Oh, it's DEFCON 5, sell everything? No, because I have to watch the levels that the markets are moving in. So that's it. There was a tweet. So we are in a tweet storm right now, okay? And God knows what tweet's going to come out tomorrow morning, because I'll tell you one thing. I think I know President Donald Trump better than pretty much all of you put together, being a New Yorker. One of my older firms, I've mentioned this before, his CFO came. We actually raised almost $70 million for his bankrupt casinos, which was the worst thing he ever did in Atlantic City. Don't forget, my boy Donald in New York is the ultimate businessman. He's been bankrupt 4 times, and he's still worth billions, right? There you go. American capitalism. All right. So I think I understand him better than all of you put together. And so political stuff aside, and I kind of like him, even though he talks garbage a lot of the time, some of the times. All right. So the fact is that he could just tweet out tomorrow morning saying, the Chinese actually listen to me. This market is going to go like this, just like that. So technicals do matter, but we're living in a tweet storm world right now. Now, how China is going to retaliate, I'm not too worried about that. China's economy is extremely weak. China does have to come to the table with some serious concessions. But the whole culture itself, the Asian culture, is very subdued. China doesn't run the trade talks through tweets. That's Donald style. Okay? And in the meantime, Donald did mention a couple of things which says this market is not going to go to complete hell in a handbasket. He said, my friend, President Xi. Read it between the lines. That's old-fashioned Italian talk. My friend. I use the word my friend, by the way. Right? And he also said that talks are continuing. Talks are continuing. So I hope you guys understand. Remember, I can make you guys understand game theory. Game theory is about how you lead your life, how you understand what the outcome of a thing of a certain action will be. Whether your car gets crashed, whether your dog gets sick, whether your wife gets sick, or your husband, or whatever, right? Or whether your chimney breaks or your radiator breaks. You know, you all freak out and stuff. The question is, I like this. Let's fall. Let's fall. Let's get those puts and VIX calls like sky high tomorrow morning. Let's get down here. We're going to get down here. I think it's going to happen while this session's going on. So anyway, talking about, I was going to say, sir, President Donald Trump, he might just tweet out tomorrow and say the Chinese actually listen to me and they're open to this and that. Next thing you know, the market's going to be up 300 points. So we have to be quick. You can't go to bed for days and days with a huge amount of shorts. You have to be strategic. You have to be tactical. Hello, Adam. Thanks for coming in. So that is where we are right now. So let's go technical at this point. We've covered the basic points here. By the way, talking about the Fed, Powell is a complete nerd. He did what was right, which was perfect. That's why the markets went up almost 400 points today after dropping yesterday for no reason. The idiotic game theory stuff that you're going to see on Wall Street, believe me, I lived through it for 14 years. The same crap that's being sold in masses yesterday were bought today in bulk. Powell cut rates. These are very difficult, complex economic jargon. You expect the average American to understand that? I don't think so. Okay, this is not barroom talk. So he was trying to explain to you about mid-cycle adjustment, blah, blah, blah. I'm not even going to get into it. But he wasn't saying anything wrong. They are going to cut rates in September again. And if this China deal keeps on collapsing, they're going to cut rates more. But you keep on cutting rates, what do you get to? Nothing. And what happens to the market? Nothing. The market can only go up to a certain point. Capiche? Understand?
Yep.
That's it. So simple thing here. This is what I'm looking at. I'm looking at 2900, 2913 as a major bottom short term. Till the next tweet comes. Might come 6 a.m. in the morning tomorrow. Might come now. But I'd like it to get here. But if everybody's watching the same level, 2900, it's not going to get there. It's going to be a very nice profit. So this honestly is an ugly, ugly cat. Now that's on a short-term basis. Not that short-term, it's an hourly basis. So this is truly a swing chart. If you look at it on a 15-minute chart, see you later. I drew out the levels, and every level that it hits, it tries to bounce. Remember, these levels were drawn before markets are coming down. These levels were drawn before the markets were going higher. Every one of these levels, you have to respect it. Forget about respecting me. Respect yourself and the charts. I don't need respect. Okay? I don't need respect. Trust me. I just need you guys to respect these unbelievable charts that I draw. These lines were drawn. Every single one of these lines that are drawn, that's where the market goes, and that's where the market either finds resistance or support. Now, if you are an active trader, or even a non-active trader, but let's say you're an active trader, you can benefit tremendously from these charts because these lines and these structured charts are truly unbelievable. And I've mentioned it to people repeatedly. They're not unbelievable unbelievable because I'm some sort of friggin' genius. I'm a genius at structuring charts because the machines are very structured. Machines calculate 1 plus 1 equals 2. Humans calculate 1 plus 1 equals either 3, 4, or 0, depending on their emotional mood. Algorithmic high-frequency machines are binary machines. Algorithmic numbers, numerical monsters. So I can draw the charts that way. See how precise they are. Look at this. I can keep going. I call the huge cup and handle stuff happen. But this is where things go wrong. This is somebody please mute their mic because there's a lot of feedback coming to me. So you got this, the Fed sell-off, like, oh my God, he said mid-cycle adjustment. Nobody even understands what the hell mid-cycle adjustment means. They think like, oh, I'm in midlife, so I need to adjust my life. Like, nobody understands that. Just go find the definition on Investopedia or Google it. I understand it, but I'm not going to explain it here right now. Mid-cycle adjustment. Oh, the markets heard those words. They didn't like it. Like, bullshit. It all happened because of a massive drop in government bond deals that caused, and in the meantime, the dollar went up and blah, blah, blah. All kinds of different asset correlations went wrong. So hedge funds, which are very quantitatively modeled, automatically started selling. And the same things were bought today. That's why we had a 300 plus point rally. So if you didn't buy around here, you're a complete, you know what? Well, you know it if you didn't. So it's not going to tell you that. Now, I told you the markets would be, the red arrow was put here well before the sell-off started. Told you we'd be hitting major resistance. Talked about it, even mentioned it. You want to take some profits down. And then lo and behold, the tweet comes and a massive drop. So this is, technically speaking, a bear flag. This is actually not a bear flag. This is a ascending triangle. That's really what it is. I guess you could, like that. That's what it is. A bear flag normally is this, where something drops and goes up and then it falls again. That's a bear flag. So this pattern, I'm a little bit stupefied. This, I would call it an ascending, like a descending triangle. Yes, we can bump up a little bit, this and that, but looks like it's going to hit those same levels, it's going to hit my levels and it's going to, again, croak again. Now, what is it? Let's look at the longer term charts to see what is going on, where we can go. Now, you already know the answer if you looked at my Twitter feed. Can anyone tell me if they saw my S&P charts on Twitter feed? Yes or no, please. I'm not going to mention anything. I'm just going to smile. Did anyone look at my Twitter feed on the S&P charts, or you guys don't care? You're not trading, you're not making money on the long side or the short side. You're just waiting for a tooth fairy to come and give you $1 billion. Like, what's going on? Did anyone look at my S&P charts that I put out repeatedly on my Twitter feed?
Yes.
Anyone else saw it? Actually, I really don't care because I don't have that much time to even ask those questions. So let me get straight to the point here, because these are very important times here. Whether we have a change in trend or not, I'm trying to show you guys how to play this market, as I've always done so. So let's take a look at the S&P Thinkorswim chart. Clean it, real simple. All right. We talk about these major uptrending lines. 34-day moving average. We broke through it. We sliced through it. Told you we were retesting it. We retested it. We tried to bounce yesterday. We went well above that. This was all lovely green this morning. And then we had what is this candle called? Can anyone tell me what this candle is? What is the name of this candle? I even wrote it down. You guys need to focus a hell of a lot more, seriously. Maybe then when you make a little bit more money than you are, and stop blaming the rest of the world for it. What is this candle? Adam, what is this candle? How about I give you a hint? It's the opposite of this type of candle. What is this candle? I even wrote it down. I know it's a bearish reversal. I ask you the name of the candle.
Inverted hammer.
Thank you. There you go. It's a hammer falling on your head when you try to put a nail on top, trying to nail a nice, beautiful painting up on the wall, and the hammer falls on your head. That's what a Donald tweet is when he attacks. All right, it's an inverted hammer. What do you do with inverted hammer? You go with the trend. Just the way with a hammer reversal right there. And yes, Adam, it is a bearish reversal, but I was asking the name of what that candle was. 1 second. So here is your hammer reversal that we have played upon and preyed upon and predicted and done well on. Now we have a bearish engulfing, and then we have an inverted hammer. We have two bad prints telling us we're going down. Now, the dogmatic bears will say, we're just going down, we're finished, Donald Trump will never do anything, the Chinese are just going to keep on doing this, and blah, 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 everything's going to go to hell in the handbasket. No! No, no, no. You all know where we're going to go. I've already written that. Where are we going to go? Where are we going to go? We broke the 34-day moving average. Where are we going to go? If you guys can read this, don't be a traitor.
29.
29.26. 29.25. Thank you. Thank you, sir. Mike Murphy. Yeah.
That's me.
There you go. 2,900 is major support. Major support. And we are going to at least retest the 50-day moving average. Now, when you have, and this is real simple, when hammers look this heavy, it means they're heavy. What does heavy mean in the market? Heavy selling or heavy buying, right? This is heavy buying, real heavy buying off the December 24th Christmas Eve massacre. Heavy, heavy buying. I've talked about that a gazillion times. This is heavy selling. So when you hit that 50, we will find a little reprieve, a little pause. It'll go up a little bit, but the weight of these candles are most probably, in my opinion, bring it down to what Adam just pointed out correctly, which is a gap support level between 2,900 and 2,895, right there. This is a gap. Watch. See that gap? That gap. The 2,900 to 2,895. We break that. See you later. We are going straight down to 2,826, literally. Because at that point, we'll have broken three major supports. We have broken the 20, thanks to today's tweet. We have broken the 34, thanks to today's tweet. We are not there at the 50 yet. If we break that, we'll find major support at that 28.95. This is S&P I'm talking about, so you don't have to calculate the E-minis and stuff like that. 28.95, 2,900. There's a gap here too. There's another gap here, which was filled, but still, that's at 28.50. All I know is one thing. If we break as we are falling, unless we have a miraculous turnaround tomorrow morning, which, by the way, I warn you, this is not the old market. This is a market driven by complete machines and by tweets and comments from China and blah, blah, blah. Okay? This is not the old grandpa's market. And I love my grandpa. Okay? That we could just turn from here and go nuts. Just the way yesterday everyone was freaked out and it said we would be holding this level, and we did. Was it 100% certain? No. But as it developed, I walked you guys through it. As SPY calls this morning, the 301 calls, ladies and gentlemen, or even the 300 calls, were at like roughly about $1.30. they went to $3.50. The 301 calls went from 14 cents expiring tomorrow to almost $1. You go figure. Do you really want to be a trader? Well, trade. That's it. You want to be a trader, trade. You want to be a prognosticator and a, pseudo analyst, thinking you work on a big Wall Street investment bank, making $10 million a year, making wrong predictions about the market. That's your problem, not mine. If you're a trader, you have to act. You don't sit around into an analysis paralysis mode. And that's a fact. So, saying all that, these are major support levels: 28.95, 2900, and 29.26. Personally speaking, that heaviness on this thing, I want the market to flush out. Because when it flushes out, we get cheap prices. Let me write this down in big letters, and please print it and put it on your desk in your brain. Flush out, technical flush outs do not destroy the market. They give us cheaper entry levels, which 90% of traders never take. You can do momentum trading, chase new highs. We do that and we do well. But the ultimate buys, in my opinion, are the ones where the panic and the despair, like December 24th, is so heavy that you get a generational opportunity to make yourselves rich, wealthy, so you can spend on your family, on your charities, on our veterans, on PTSD veterans that I'm one of my biggest supporters. I am in. You know what? You can do all that stuff instead of making frigging excuses why you didn't do something. We are not a nation of losers and complainers. We're a nation of winners. In order to win, you have to take risk, calculated risk, quantifiable risk to make a lot of money. You want to be a socialist? You want to be a communist? You think the government should just give you free money? You think the market should give you free money? Blah, blah, blah. Then just don't live in America. I'm dead serious. Okay? Think about what I said. And I've been around, trust me. I know. So technical flush outs are absolutely great. We get bargain basement prices on many things, which will slip and slide, sure. Now, unless we have a complete change in trend, which means that we're going to go all the way down to the 27.30 level, which we can. If we lose this level, we have a fair shot to come down to this level, which will bring us into a macro, huge monster W formation, and you want to put a shitload of money at the 27.50, 27.60 level, just the way I told you guys to do back in the month of June and in the month of March. Go check out my videos. Go look at my tweets, posts, and everything. And some of you who did very well. But that we shall see if we can even get there. Because if we do get there, I can assure you, my boy Donald from New York is going to cut a deal with anybody. Because he does not want to see the market down 3,000 points while the Dems are, and every single other, the opposition party, I should say, respect all parties, the opposition party, and especially the hardcore socialists and the hardcore liberals, nothing wrong with that. Everyone has their own opinion, even though I don't agree with it. They're going to just say, told you so, told you so. You honestly think that President Donald Trump wants that? No. He's going to tweet storm the market higher. So wake up. So bargain prices. Where do we get the ultimate bargain prices? If you want to look at a macro trend, then we could possibly see the market around 27.50 sometime by the month of September. And I'd like that. I would really, really love that. Now, if some of you say, no, why would you love that? Well, you wouldn't love that if you were idiotically, completely long all the way down. I'd love it because I have a ton of cash on the side and we'd be doing some tactical shorts, some few longs here and there, taking profits fast, because this would be substantial. And then you'd know what it feels like to be a real trader. I'm not mocking anybody. I'm just trying to wake you guys up. Stop thinking like a piker. Think big. Now, if everybody, especially the bears, want the market to be at the 150-day, 200-day, which is at 27.89, and all the way down here at a major support level at 27.29, well, it's not going to happen that easy. Because this is the only reason why the markets will most probably bounce off this level pretty substantially, other than the fact there's going to be another tweet saying, oh, the Chinese are coming around, is the fact that there's too much at stake for the markets to fall this hard. Too much political stuff at stake. You don't think that, I mean, they cut rates quarter percentage point. Was it necessary? I think it was. The markets wanted 50 basis point, half a percentage point cut. President Donald Trump went ballistic on Powell, which I think is so stupid it's not even funny. Why are you pissing on a guy who is probably one of the most straight-laced Americans you'll ever meet? You think he's trying to destroy the Donald Trump presidency or the U.S. economy? No. He's so idiotic, I can't even say it. He attacked him like he was a little like puppy dog, stray dog, like, you know, you're kicking him. That's really wrong. It's so wrong, I can't even tell you that. It really annoys me. It saddens me. You cannot attack a person you nominated as the Federal Reserve Governor who is doing the right thing. And he said he'll cut more. What do you want me to do? Take his pants off and dance around? I'm dead serious. It pisses the shit out of me when you attack such a great American patriot like Jerome Powell and such. I don't give a shit about politics, okay? I'm just telling you the truth. Anyway, next topic. So the point is that Powell's going to cut rates again in September. This China crap keeps on going down. He's going to cut rates for the next 3 times. But if you keep on cutting rates and the economy doesn't go up, what the heck is it going to do for you? We cut rates so much. The interest rates have come down. The market's cutting rates big time. Does anyone tell me what the 10-year bond went today? This is substantial. This is huge. It's huge. Where did the 10-year bond go today? Which is basically the benchmark for your credit cards, your mortgage loans, your car loans, you name it. Look at the shit that happened. Where did it go? Can somebody tell me? Please. You guys do read numbers, right? Where did it go? I want a specific number, Adam. You have a screen? What is the specific number here? I know it went under 2%. Thank you. Thank you, Adam. Appreciate that. We're at 1.87%. The last time we saw freaking 1.87%, we're in the heart of a recession. Now people say, oh my God, how is the bond deal going to 1.87%? I'm going to remortgage my house like 3 times over. Bullshit. Home sales are actually going down. The last time we were at this level, interest rates going down ain't going to help the economy. So pushing Powell to cut rates forever is not going to do crap. The last breakout was on, and wake up guys and listen to this, okay? November of 2016. What happened on November of 2016? What happened on November of 2016? Are you guys Americans? I'm dead serious. You know, I mean, unbelievable. What happened on November of 2016? Woo. I love these sessions. Thank you. Adam, you're the best, man. You take me out of my misery. Yes. Donald Trump got elected. Trina, wake up. Mike Murphy, wake up. And everybody else who's going to be listening to this later, wake up. Donald Trump got elected. It was a monumental sea change in U.S. politics and the economy. Elected. What number is he? Number 46? What is he? I forget that. He was elected as president. Adam would know. Adam, he's 45. Yeah, I always mix up that number. President, 45th president of the United States. God bless America. Okay? Hard-fought election, won. We are back to where the yields were when he got elected. Is that a coincidence? No, it's not, because even if you look at the charts, it's telling me, and by the way, you could be at a heck of other service and stuff. Nobody's going to teach you about the market that I'm teaching you. Why am I teaching you this? Because you're going to make a crap load of money. So you're not going to get freaked out and sell everything or buy everything just because the market dips. We're not in the BTFD camp. We're in the tactical BTFD camp, buy the F dip camp, okay? So this is a neckline breakout, if you notice, right? This was an inverse head and shoulder kind of thing, neckline breakout. We are back there. Yes, we could slip and slide a little bit more, but this is unheard of. Now, why is it down to 1.9%? Part of the reason is because the rest of the world, including the Europeans and stuff, their bond yields are negative. So they are all piling in their big sovereign money, which means the governmental money and stuff, inside U.S. government bonds, because at least instead of losing 0.1%, 0.02%, or whatever the case may be in German bonds, which is equal to our U.S. government bonds. Germany is a very strong economy. So instead of doing that, they can actually earn, worst case scenario, 1.9%. You'd do that. If you had $10 billion, wouldn't you make 2% on that money, which is, what is it, 200 million or something like that, or 20 million, right, a year? Instead of saying, no, I'm going to give back like 20 million to, or 2 million just for keep in negative interest rates. No, so they're all piling in here. So a lot of global money is into our U.S. government bonds. So let me write that down. That's the reason why, one of the reasons, and one of the Fed governors, Fisher, mentioned the same thing today on TV from Texas. You know, the ex-governor, he's the coolest guy ever. So global money is hiding in our government bonds because we are the safest, strongest country in the world. We have never defaulted on interest rates. And they were like, okay, I'm going to make 2% till I go and put it to work. Now, they would love to put it to work once we cut a deal with China because it affects everybody. You think the China deal just affects us? Affects the whole global complex, right? All kinds of stuff. So this is a pretty ugly chart. We could slip and slide a little bit lower. And some of these big bond guys have said, oh, we're going to go to 1.4%, in which case you better go out there and refi your mortgage like nobody's business. Because mortgage rates have to be pushed down, are being pushed down as we speak. It's not increasing home sales because of affordability, but hey, if you have a mortgage, don't go frigging refi your mortgage because rates are not going to be this low for too long. Is it going to be a great boost for the housing market? I hope so. Any idiot who's looking to buy a new house and doesn't want to lock in rates less than 4% on a 30-year mortgage is a real moron. So that's it, guys, all right? So this is another reason why the market's like going topsy-turvy. Because if I showed you a stock chart like this, yes, corporate junk bonds in Europe are negative. Can you believe that? I didn't know that, Adam, by the way. I know that sovereign bonds were negative, but corporate junk bonds, I'll take your word for it, are negative. You know what that means, guys? Read Adam's statement. That's a smart comment. That means even risk bonds are negative. Corporate junk bonds are the same thing as almost like a proxy to buying stocks. They're negative. What the heck's going on? All right. Because they're doing quantitative easing to the point where it's going nuts, cutting rates. All right, guys, enough of the macroeconomics. The bottom line is rates going down. Overall, textbook is normally great for the economy. Low rates are good. The market's putting low rates there. Trump doesn't have to attack Powell. Poor Powell, man. Imagine. But then at the same time, he'll tweet out like two days from now saying, I actually like Jerry. I invited Powell over to Bedminster, which is about 20 miles away from where I live, golf course, to come and play golf with me one day. And then, you know, like the markets are going to be like, great, and go up like 200 points. Because he doesn't hate Jerome Powell. He just likes to piss on people. He's an atypical New Yorker. Talking about President Trump, okay? So, just the way it is. Just the way I get loud sometimes. So, all right. So, that's it. Now, bottom line is going back to the markets. Futures are now, I actually want futures down a lot more. I'm not getting it. They're only down 7.5. That's not too much. I'd like futures down. China's going to open in China probably just opened right now. Net, technically speaking, this support level should hold at 29.10. I believe this rising, this is a weekly, the rising 20-day moving average, the blue line will hold as 29.10. So we are not that far. That's 40 points, 40 times 7. And you're talking about 280 points max move. However, this is also a very strong support level that I've shown you guys before, this red line. That's 29.41. So another 10 more points, the market could bounce pretty hard. I repeat again, do not go overtly short. Be tactically short. Whether it's this complete CIT or not, we don't know yet. Change in trend. This, the bears will look at and say, uh-oh, this is starting to turn. We have lived and profited on these stochastics. This is turning. If it crosses below 80, you want to be heavier short, just the way it happened here. Then we'll have a multi-week correction. This is just the first week that we are down. We will most probably bounce, and if we are going to fall, we're going to get back towards 3,000 and fall. That's just the way the beast works. So the stochastics won't rise. They will keep on continuing to fall, just so you know, even if the market has a reflex bounce, because that reflex bounce will be sold. And once you lose the 20-day moving average on the weekly, the next level of contact is a very critical level. Why is it a critical level? Because the 34-day moving average is just crossing the 50-day moving average. That is a long-term huge positive. That's at 28.05. Is it possible we go to 28.05? I have no freaking idea. It's not going to be easy. It's not going to be one-way straight down. If it's one-way straight down, I love it. We'll make 700% in one day. But it never makes it that easy. There's major support at 2,900, 2,900 and or 29 or 2,900, 2885 around these levels, and then we shall see. This level is what we are watching, 2,800. This might happen by the month of September or even in August. And if we lose this, see you later. That's when you start to pull in the big shorts in the big hedge funds are going to go nuts shorting the market. If we lose 28.11, that means this is going to go like this by then. Just like that. This is going to turn down. That means back to reset. And these resets on the weekly take a couple of weeks. So I don't know yet. So that's it. Now, individual stocks, different story. Different story. I've shown you a lot of great ones and lots of great reversals. And I'm not going to waste, I shouldn't say waste, but I'm not going to spend my time explaining all that here. Go through my Twitter feed. You'll see enough reversal stocks. Here was one that I had no freaking idea what this stock was. And I made a real decent sum on this. This is Krone. This is what Krone did. Was it Krone? No, it wasn't Krone. What was the one that, 1 second. I told you guys I was long it and I bought it at the bottom. Not Krone. Krone is some pot stock. Not that. Cone. So check this out. So the stock, I'm long it yesterday, atypical, like just very few calls in that basket. So the stock collapses. And this is a classic example of how much you can make. I don't give a crap about China and all that big stuff that I just explained to you. This is pure trading. All right, pure trading. Cone. We had the 60 calls, if you remember. And I'm pulling it up on the screen, so I'll walk you guys through it. This is such a classic example that you have to really not give a crap what's happening with the market if you're focusing on one or two stocks. Honestly. So this stock, I have it at around like about $1.20, $1.30. Few calls. You can buy one. The stock goes, the calls yesterday, this was yesterday. Today's Thursday. So I told you guys to buy it yesterday as a earnings play. So the calls are around the $1.30. Stock goes down from around 59. It drops all the way down to 55. Just follow this, okay? It's not rocket science. It's trying to help you guys out. So the calls literally open down towards 10 cents. Let's call it 10 cents. Great. So you're like, okay, lost that. Big deal. The others went up big time. SPWR, God knows where it went. Most importantly, Cirrus went from literally the CRUS calls, the 50 calls. They were again $1.40. They went to almost $10. Okay, they went to $10. Somebody gives me a bag full of excuses, I'm really going to smack them on their head. So anyway, so net, the basket is way up nice. So this one, 10 cents. Then it jumps up to about 20 cents. So I keep on buying a little bit, bought line a little bit. I wish I'd bought like a frigging 100. Okay, the stock climbs all its way back up during the day. And you can follow that on the 15-minute chart, on the 5-minute chart. Do you know where the calls went? These are the August 16th. I think they only have monthly. August 16th, 60 calls. Because, this is where I asked you guys to buy it, so I bought it close to the money. So I bought the 60 calls. 60 strike, right? August 16th, 60 calls. At around $1.30, $1.40. I don't remember the exact number. They literally went to 5 cents, 10 cents, started to jump up to 20 cents. Now wait for the drum roll, all right? They went to $2.87. So forget about staying up till here. You could have bought them at 20 cents, and they literally went up $1,400% in one day. Is this a joke? This kind of crap does happen, but you have to act on it. 1,400%. So let's say somebody bought 100 calls here at 20 cents. How much is that? You guys are option traders, right? How much is 100 calls at 20 cents? Please, somebody please answer. No, you're wrong.
2,000.
Thank you. You just had to add another zero, Adam. I know it's simple. So you could put, let's say you put $2,000 in. Let's say you put $200 in at 20 cents. And I did tell you guys to basically buy that. Okay? So if you bought 100 contracts, it would cost you $2,000. If you bought 10 contracts, it would cost you $200. Let's say you bought $2,000. You got to think big. So this way you program your mind to do things along the way. Stop always thinking like a piker. That's what most traders do. What do we live in? Some sort of like the poorest country in the world? We're telling every other nation in the world to fix their problems, right? Trump is screaming at every other guy saying, you guys are a bunch of bums, you don't know how to run your country and this and that. And our traders here act all like they have 3 cents in their pocket. What the F is going on? You don't have to be a billionaire to be a trader. You have to be a millionaire in your head to be a trader. With a 1,000, 2,000, maybe 3,000, 4,000, 5,000, 6,000 bucks in your pocket to be a real trader. So stop thinking so small. So if you get $2,000, 100 calls, where did the $2,000 go to at 287? Come on, get with it, guys. Wake up and somebody tell me. I want you guys to tell me. You guys are options traders. You should know this like the back of your head. You had 100 contracts at 20 cents. Those contracts went to $2.87 at the height when the stock went to $62.42 at the end of the day. So your $2,000 went to what? You paid 20 cents for the contracts. Guys, please don't disappoint me or disappoint yourself. Thank you. Thank you. So you bought contracts. You bought 100 contracts at 20 cents. That cost you $2,000. By the end of the day, you had $27,000. Now people say, "Oh man, yeah, you just didn't know how to do it." Like garbage. See, this is what changes you from being a normal trader to be a frigging super trader. Because you make that kind of money, you'll be like, "I'll take that trade. I'll take that trade. I'll look at that chart. I'll understand it." Your brain will push you to be a winner. Just the way when our Marines and SEALs go out there and screw out guys, they don't even know where the hell they're hiding in those mountain pockets, and they flush them out. That's the attitude they have. So as a trader, that's the attitude you need to have. Stop the losing attitude. Trade to win. Don't trade not to lose. Remember that. Trade to win. Traders get into trades saying, oh, I'm not going to lose that much. That's almost a guarantee you're going to lose because you're going to sell at the wrong time. Trade to win, not trade. And Adam, calculate out for me. You put $200 in on 10 contracts. Where would it be? Give me the number. Trina, give me the number. Nobody? Why is Adam answering all the questions? I'm going to fire him. Just kidding, Adam. Okay, so yeah, you put 200, you'd be up to 27.80. Think about it. Trade to win, not trade not to lose. This is the biggest bane and mental baggage of all traders. And we are all guilty of that. We are all guilty of that. If we played offense, which none of us really are, think about how much money you'd have made. Tweets or no tweets. Apple, great winner. I had very few calls. I wish I had just bulked up because I knew the charts, everything, and everybody's so negative. 65% of so-called bullshit analysts from Wall Street were negative on Apple, and the stock killed them. Trade to win. Don't trade not to lose. You know exactly what I'm saying. And this is a prime example. On a stock I had no idea about. I looked at the list of stocks. I used briefing. I used not service Benzinga. I looked through it. I looked at the chart. I looked at another options table. Stock was initially down. This is a hedge fund type of big time winner. And the stock's probably going to go higher. Because when you look at not just the 2,000 going to 27,800 or the $200 going to 27.80, I took most of my profits around these levels. I didn't wait around till the end, and I wish I had a lot more. So I'm guilty too. But you look at the daily, and you look at this type of thing. This is what the stock came down to today. And then you get this bullish fat candle, massive short covering. Look at the volume, 2.5 million shares a pop. This is basically going to go around 64. Or maybe, yeah, 64, 65. You can do this, guys. We all can do it. Got to put a little bit of money in there. And this is not the first one that did it today. Okay, but this one was the biggest one. So guys, that's basically it. Any quick questions I can answer? I'm gonna wrap up. Markets are already trying to find a footing. Look at that. Futures only this candle alone, futures only down 5. Last thing I'll show you, because I know no one really has a question because we have talked about quite a few things and you guys were very involved, so that was good. On the S&P futures daily, we're already turning. Thank God I don't have too many shorts other than a few VIX calls and few SPY puts, because the way it looks like we're going to open up higher. That's the market. Look what happened. Look what happened. By now you guys know this, like a little teddy bear you guys used to go to bed with when you were little, right? The stochastics, the full stochastics are turning of the levels that I showed. And this has a minor, you can barely see it, green doji candle. Look at that, right there. And all this is happening over the off the rising 50-day moving average. Even though this is so ugly, it just happened so fast. We got oversold so fast. Is it fully oversold? We shall see. Because remember, when these stochastics started turning, this morning, the stochastics looked like this before they turned around and went down. Now they're turning off these deep oversold levels. We could have a pretty substantial bounce. We shall see. Remember, one tweet from Donald. Yes, the Chinese actually got back to me. She said, hey, my friend Donald, do you want to have more dumplings or you want to have that nice crispy Beijing duck? Next thing you know, the market's going up 1,000 points, all right? That's the nature of the beast. In the meantime, trade the charts, play the sell-offs on a tactical basis, have a little bit overnight based on these swing trade type of directions, but don't be surprised if we turn around and go up 200 points tomorrow. We don't know yet if there's a change in trend. And always remember one thing, one of the biggest signals. When I get way too bearish, buy the heck out of the market. It always works. When I get way too bearish, buy the heck out of the market. On that note, have a great evening. Adam, good to see you. Mike Murphy, great to see you. Trina, always the best. And everyone else will listen to this. If you're not trading, you're losing. Good night.